Welcome to Infinity Capital, everyone. My name is Raj. So today we are going to discuss about Heranba Industries. This company had an IPO recently. It's an agrochemical company and it manufactures synthetic pyrethroids and its intermediates in India. So these intermediates and synthetic pyrethroids are used in insecticides, fungicides and herbicides. Right, so they have around 4 manufacturing plants in India. Employee strength is around 650 and their market share in pyrethroids is around 19.5%. We are quickly going to go through their credit rating page and find out more information. So one of our sources told us that they have 19.5, roughly 20% market share in pyrethroids. So let us find out if other sources are also saying the same thing, right? So again, HIL is present in entire product value chain of the agrochemical industry. So they make technicals just like India Pesticide Limited, even they specialize in technicals. Formulations, right? Formulations are the end products which they sell with a brand name, and intermediates. So they have around 2 intermediates and 80 formulations, right? 15 to 16 technical products. So they dominate the Indian pyrethroids market, amounting to about 20% of market share, right? It has a strong foothold in the domestic formulations market through a network of 9,400 dealers and 200 representatives across India. They also export to 60 countries. So these are Middle East, Asia, Southeast Asia, Africa. Primarily, they are not into regulated markets like US and Europe or Latin America, right? So they are not on those markets. So what is the other information that we can find out? So what we are going to do is we are going to go through the conference call. I'm on the conference call of the company. This is the first conference call they did after the IPO. Let us find out more information. So Heranba was formed in 1996, right? And they have a wide network of business across the world. India is the manufacturing hub, obviously. And they also have a fully equipped in-house R&D facility. Okay. Now, their R&D facility is situated in the industrial township of Gujarat. And then there are 3 independent manufacturing units. 2 are situated in Vapi and 1 at Sarigram, right? So facilities offer a range of crop protection, public health solutions, so on and so forth. They have a separate R&D facility at Vapi and Sarigram for product development. Okay, so now we know that they have separate R&D facility at Vapi. So 2 facilities have R&D facility. Plot size of our Sarigram unit is 55,000 square meters. Out of which 22,000 square meter is operational with formulation and packaging, and the rest is earmarked for future expansion. So here we got to know that 32,000 square meters is earmarked for future expansion into technical manufacturing. So they've applied for the necessary permission from the authorities. And for in their Vapi plots, they have already initiated capital expenditure and production should start by Q3 FY22. That's by next year, right? And they've also acquired a adjacent plot near Vapi. This will help them increase their current capacities, right? So they have received consent from Gujarat Pollution Board to establish manufacturing of products at Saika. It's a 34,000 square. So guys, they have a lot of expansion plan, right? The company is planning to set up manufacturing unit of around 10,680 tons of product, right? So this is the visibility that this amount of capacity it will be increasing. Okay, and apart from that, then there is they are talking about their businesses, right? And we are looking to exploit opportunities in various technicals going off patent, right? So technicals keep going off patent, guys, and then they enter the market with their own products, or they get regulatory approval, so they enter those markets. So if you would like to invest in this company for a longer period, then you could, do more research on the company. So that's it from the conference call. I will take you through the investor presentation. So basically, they have presence across 60 plus countries, 650 employees, 81.5% of the revenue comes from institutional customers, right? And 9,400 dealers. Okay. This is the history of the company. Started in 1996. Technical plant was set up in 2002. Formulations was set up in 2005. Branded formulations, so on and so forth, right? Initial public offering in 2021. So you look at the history of the company, guys. From 1996 to 2021, it took them around 25, 26 years to become so big that they could come up with their IPO. So it's always good to know where has the company come from. It gives us a understanding of how hard the promoters have worked, to bring the company to this level. 2015, they achieved a turnover of 500 crores. Okay. So this is the manufacturing process that they are talking about. So reaction, purification, final blend packing, these are the products. Okay, intermediates, these are the products that they make in the intermediates. Technicals, these are the products that they are making, technicals. So formulations, these are the products, right? Formulations. The revenue from technical and formulation. So technicals is the one which gets more revenue for them. Formulations is I think around 50% of technicals. Okay. Here are the promoters. Mr. Sadasiv Shetty is the chairman and executive director. Mr. Raghuram Shetty is the managing director of the company. Okay, and these are the other key management personals of the company. Let's just quickly go through the business mix. This is the important stuff. So in the this is how the revenue, what product gets them how much revenue. So domestic technicals get them around 42% of their business. Export technicals around 31, domestic formulations around 20, export formulations around 7. So the highest revenue comes from domestic technicals and export technicals. Okay, so primarily it's a company which gets 75% of its revenue from technicals. So although they are selling formulations, if you see their formulation business is actually sort of gone a little lower revenue from formulations, but primarily a company which banks on its revenues from technicals. Okay. Apart from that, what else can we find out? Their EBITDA margins are at 18-19%. It has gone up significantly in the past 3 years, right? So now we don't have much history about the company. So, we have to be a little careful about, what sort of EBITDA margins can it sustain. If the margins collapse from here on, we may see some, collapse in the profitability as well. So we have to be careful while we invest in this company. Even for the next 2 quarters, we'll have to see, how it's how if the margins are contracting or not. Net debt to equity, very minimal debt. So that is a good sign. Okay. And revenue from exports, so they have a decent revenue mix. All right. And revenue from operations, so branded formulations, technical domestic, technical exports, formulation exports. So this is technical domestic and technical exports. These are the revenue from operations. So if you would like to do a deep dive into this, guys, you can go read the annual reports, find out more from there, or the investor presentations. All right. Here is the snapshot of balance sheet and cash flow. So if we look at the cash flow, the cash flow from operations is pretty robust. Overall cash and cash equivalents at the end of the year is around 847 million. So that is pretty good. So it's around 60. It's showing around 60 crores in 2021. So pretty robust cash flows as well, right? So this is all that we could find out from the investor presentation. And now we'll just quickly go through the credit rating and find out more stuff, right? So new product launches in export market, improving capacity utilization, new capacities are coming on stream, as we found out from the conference call. So, then what else? What else do we have? So they did this IPO, and they raised, I think, around some 60 odd crores from the IPO. They are going to 60 crores in going to use it in their working capital and other stuff, and they are going to incur a capex of 150 crores in the next 2 to 3 years. So it will be funded through internal accruals. All right, what is the weakness in the business? As we know, in all agri-chemical businesses, it's a very high working capital business, so the gross asset turns are around 188 days. Then they have to extend credit to the dealers as well for roughly 120 days. So this is something that is a part or nature of the business, so we need to be aware of it. It's a high working capital business. And apart from that, the Indian agricultural business is inherently dependent on monsoon, right? So if there is a bad monsoon, then the business may suffer. So these are the two risks in the business. Apart from that, everything looks pretty all right, from where we stand right now. So, all right. Now we are going to go through the investor shareholding pattern. Promoters are holding around 74%, right? And I think they may have some shares in the lock-in also, because a certain amount of shares by the promoter is in lock-in for the first 3 years or 18 months. I'm not really sure. So we'll just go and check promoter and promoter group. So currently it's not showing any shares in lock-in. However, sometimes their shares are in lock-in. So it's something that we need to be aware of, because they might offload those shares in the lock-in, later on, or however it works. In the public shareholding, we have this government pension fund global. They have invested 1.4%, so on and so forth. And alternate investment funds have around 1.1%, right? Then there is any other corporate body, so on and so forth, right? So there is only 18% of shares out with retail to be traded on a regular basis. Okay. And what has happened here is, guys, if you see, some of the DIIs have actually sold off the shares. So if you see, this 4.80% became 2%. So roughly 2.8% has been sold off. So if you see, the public stake has gone up over here. Something that we need to be aware of. Even though this sell-off has happened, the stock has not sold off. Even after the minimization of the DIIs, the stock has not sold off. So that's a good sign. Just something to be wary of. Okay. On balance sheet front, they have around 50 crores of borrowings, which is pretty all right. 3,300 crore market cap company. It's pretty okay. And they have around 85 crores of cash equivalent and 10 crores of investment, so 95 crores of cash on the books that they can use. So that is pretty good. On the sales front, sales have gone up by 700 crores since 2016. Their operating profit margins have become much better. Profit margins are actually doubled, and they have become relatively better over a period of time. Much better. But this is a risk, in my opinion. Could be a risk, because if the margins collapse, then even though the sales might come at the same rate, the profits are going to fall. Overall, if you see the profitability, it's gone up by 10 times, right? This has also come on the back of higher profit margin. So we'll have to wait and watch, how the company performs, what sort of disclosures are happening from their end, and if this run rate can sustain. So I'm looking to invest for the next 2 quarters, so I'll tread carefully. Quarter on quarter basis, there is a clear acceleration sequentially also. If you see, March to June numbers are higher, but this is higher by around 10%, and June year on year numbers are much better as well. And this is the reason why I'm looking at this stock. All right. If you look at the PE also, the stock's PE is around 21, 22. However, if we look at the peer, all the peers, so India Pesticide boasting a PE of around 27. Dhanuka is relatively cheaper. So I have Dhanuka in my short-term portfolio as well. Bharat Rasayan PE of 34. Okay, then Rallis India a PE of 27 on a stock where the revenues is not coming in at a higher clip, right? At profit margins are around 13%, it is commanding a PE of around 27. Okay, then you have Sumitomo, I'm sorry, 56. Very premium, a very premium company. They have Japanese legacy and stuff, but still, PI Industries, PI and Heranba are no match. PI is in a different league, altogether. UPL is at 18, but UPL there are problem with disclosures. So if we look at all the other companies, they have a PE of around 26, 27, right? So even if we take an average PE of say 25, 20, say assuming that we get a PE re-rating, PE goes up to 25, 26. So on an March EPS of 38.54 and we get a PE of 26, we can expect at least a price point of 1000 to 1050 on this stock. So the stock is trading at around 837. So 1050 minus 837. So divided by 837. So that comes to around 25-30% is, 25-30% it can go up only on the PE re-rating. Apart from that, if the sales and quarterly numbers come on a higher clip, then we can see further upside in this stock, right? So this is on the fundamental front, and I like this stock because from it has acceleration on all fronts, right? So the only concern is that the operating margin is at relatively higher rate. So if this operating profit margin collapses, then we need to worry. So I'll be watching this closely. What's happening on the technical front? So if you see, the stock got listed in March, and then it got sold off. Now it is trying to consolidate, right? So on a weekly chart, if you see, the stock is basically consolidating within this range. Just a second, guys. Within this range, in this 19-20% range. So in this week it sold off pretty bad, but then it came up pretty quickly. So that's a good sign, right? So see, it got sold off and then it recovered very quickly. So what's the trade analysis here? Another good sign is it is trading above its 50-day moving average. So that's also a good sign. So what am I looking for? I'll be looking to accumulate the stock in 750 and 830. This is the range I'll be looking to accumulate the stock, and I'll be holding it for the next 2 quarters. Interesting stuff is, guys, if you see, so when the stock is selling off, volume is low. Whenever the stock is selling off, volume is here. It became volatile. My guess is that probably it was the quarterly results may have come around this time or not. So I would be looking to accumulate the stock. This is the price point, 750, 840, and hold it for the next 2 quarters, right? So this was the analysis, guys. Quick disclaimer, this is not a buy sell recommendation. It's an educational video. Thanks a lot for watching.